So good afternoon, everyone, and welcome to the latest episode of Cannabis Unlocked. Today, I'm very honored and excited to be joined by Bill Kirk of Roth. Bill, how are you doing today?
Good, Jordan. Good to see you. Thanks for having me, and excited to see where this conversation goes.
Absolutely. We really appreciate you joining the show and all the coverage you and the Roth team have been doing of the cannabis industry, the sell side work you've been doing as well. I think it's really exciting times, and I think it's hopefully, knock on wood, going to prove a feather in your cap for having stuck through the industry and continued to cover the sector despite the fact that capital has dried up so dramatically over the last several years.
Yeah, and I think to your point, it's opening up. Now's the time for people to talk about it. Now's the time for people to think about it. And it takes a little while for folks to think about it because they haven't been paying as close attention as you or I have for the last, number of years, right? They are at a 5, 6 year deficit of thinking about the cannabis industry. And it takes a lot of education. It takes events like this and the work you're doing to help people new to the cannabis sector, to be that incremental person to catch up to the base knowledge that some of us may already have. That's the work that folks need to do now and today.
Absolutely. Yep. So I'd love to get into all that. But first, would love just a little bit of background on yourself. Where are you from originally? And
Sure.
how did your career take you to covering consumer at Roth?
Yeah, so I mean, originally, I'm from what at one time I think was the highest grossing cannabis retail store in the country. It was Curaleaf's store in Belmar, New Jersey, from about an hour from that location. But if you remember when New Jersey opened up, that was one of the few retail locations, and it just sucked in the entire Philadelphia market because it borders there. So that's where I'm from, and it's just fun because Curaleaf had that wonderful store, still has that wonderful store there. But I started on the sell side in 2010 after a brief stint of playing baseball. So I was a minor league baseball player for the Phillies. Unlike the stock market, the age works against you pretty quick. There were younger, faster, better players very quickly, and my stint was quite short. But then after playing a little baseball in the Phillies system, I joined the sell side in 2010. I started off covering global beverages. So I'm coming at all this from an initial beverage background. So at the time, it was everything from Coca-Cola down to Boston Beer, Hanson Natural, which became Monster. And I started doing that at UBS, the Swiss bank. Somewhere around 2013, made the move to RBC, the Canadian bank, where I started covering beverages as well as retail. So that was my first foray into retail economics, and that was everything from Sprouts Farmers Market to Walmart. And then in 2019, I joined what was MKM, later became part of Roth. But in 2019, that was my first chance to cover cannabis as like a standalone. If you remember back then, there weren't many brokers who were comfortable covering it. Prior to that, we sometimes, even when we were talking about beverages, would be required to take it out of our marketing material, take cannabis references
Wow.
out of our marketing material, because it was that touchy of a subject at the time. So 2019 got the chance to add cannabis. Was excited by that because I was already paying attention because of beverages, right? Constellation had its stake in Canopy. Tilray and Anheuser-Busch had a relationship at the time. Hexo and Molson Coors had a relationship at the time. So I was paying attention anyway, even as like how big of a substitute could cannabis be for beverages. And so that was my first chance to cover it on a standalone basis. At the time, I rolled out on, I'm gonna mess up the number a little bit, but it was 10-ish maybe companies, maybe slightly less. It was primarily a Canadian focus at the time because that's where the liquidity and the institutional interest was. It was right after adult use went in Canada in October of 2018. And I only did a couple MSOs initially. I did Acreage and Curaleaf back then. So it was a bunch of Canadians, a couple US companies, and I came out of the gate kind of negative, right? It was to me, especially in Canada, it was just way too much weed. I couldn't find enough demand. I had five growers basically doing the entire market, illicit and regulated. And if any portion that didn't convert, or if anybody outside the top five grew anything, you had excess supply. And so we came out and basically said, don't smoke the Kool-Aid, kind of, a take on, don't drink the Kool-Aid,
Yeah.
and came out pretty negative. Over the years, we've come around, maybe too early, maybe too early, but we've come around on a lot of the sector and a lot of the names. And somewhere, again, I'll mess it up a little bit, but somewhere around 2024 is when I expanded on more of the US names. So I added a bunch of US coverage around then, thinking I want to be ahead of the institutional interest that should arrive at the time. And we were talking a lot about safe banking, or it was some of the beginning conversations of DEA hearings and those type of things. So it's up to 27 names now, Jordan. It's a handful of cannabis, about 11 cannabis, a handful of beverages, and then like another dozen or so retailers. So a little bit of everything for everyone.
Wow, that's great. And so, a lot of ways we could take the conversation.
Mhm.
To start, why don't we talk about the U.S. market in 2024? If my memory serves, it was around August or no, of the year prior when President Biden had initiated the process to look at rescheduling cannabis. And then around August of the following year, when candidate Trump tweeted out his support of the rescheduling as well. So I'm curious, did those factor into your decision to pick up the five largest MSOs in the U.S., or what was ultimately your decision as to why 2024 was the right time to pick them up?
Yeah, it did seem like a time when momentum was increasing. And we were in a fortunate enough position where I wasn't reliant on cannabis and cannabis conversations to justify my existence to Roth, right, and to the parent company. I was covering other sectors, which had enough institutional interest for trading and people who cared about our research and all the things that get the bank paid. That I was able to go do and put more attention to cannabis at the same time other people were kind of pulling back. And so for you mentioned it at the beginning, there were years of just not much capital market activity, and that made it hard for a lot of banks to justify dedicating resources to just cannabis. And the reason we were able to and are able to continue doing so and maybe even accelerate it was the other sectors, right? That bought us the time and the flexibility to do cannabis because we had other things that could help pay the bills too.
Mhm. Yeah, that makes total sense. And as you think about those top five MSOs in your coverage, Curaleaf, Verano, GTI, Cresco, and Trulieve, I think one of the issues retail investors and institutions, frankly, have had as well is how do you really differentiate what is the strategy for one versus the other?
Mm.
And I think that certainly has caused some confusion in the markets. Do you still see that, or do you think people have started to get their heads better around what the different business models offer?
I think the differences are there, and on a few levels, right? Some have a more CPG focus, some have obviously different state exposures, some do more retail, some do more wholesale. So the differences are certainly there. I just don't know for the last few years how much caring about the differences has actually mattered.
Hmm.
And it's because those companies and those stocks have been so tightly correlated and largely on regulatory, hope or outcomes that the individual fundamental stories are aren't what's driving a lot of the action. And I think that's breaking more recently. And right, that correlation is breaking and you're seeing some outsized performance from some companies relative to the others. But for the longest time, you could go bust your ass on working on the weekly Florida medical data, right? That OMMU puts out, and it's fun. It's great data. It's incredible data. It is something that would matter for any other sector in the whole world, right? But for whatever reason, it didn't matter for cannabis because we were all here comes safe banking. That's what matters most, or here comes climb or more. Or I don't even remember the names of some of them, right? Um, and so I think now is the time where people are starting to look at the differences and they're saying, all right, who has what states, who's missing what footprint, who's medical, who's adult use, who has international. And that is just beginning. And you're right, it is a little bit hard to digest because the history is tricky and the structures are tricky and limited license state versus almost unlimited license states. And so it does take a lot of work. And that is a big hurdle for newer investors to overcome, right? They have to say, all right, I'm going to dedicate this work because I think there's opportunity. And then they have to recognize how much it's going to take and still think it matches the opportunity they see before themselves.
Yeah, absolutely. And as it relates to the Canadian market, your initial thesis on don't smoke the Kool-Aid certainly proved correct. But
They
that
hated it.
said,
They hated it at the time. It was right after, because I think it was October 2018, right, when Canada went adult use, and I launched like 6 months after, right? It was in that very excited capital raise. It's here comes a new facility. People were basically raising money on how much they could grow. Not forget if there was a home for it, or forget if it was even going to be quality. It was just we're going to stand up 500,000, and that's what we're going to raise on. Um, but yes, the Canada market has actually, in part to consolidation, in part to folks going out of business, and in part to international demand helping consume some of that excess supply that had been up in Canada. The Canada market's pretty strong right now. Supply and demand are pretty well balanced. You obviously have some fits and starts here and there, but it's a much stronger market than it was, or than it has been at pretty much any time in the last 8 years since it legalized. It's the best it's been.
yeah, absolutely. It's very exciting times. And hopefully the United States is soon to be better than it's ever been before with some of these regulatory reform we're seeing on the horizon.
I think so. And that period of tight capital prevented any sort of excess supply issues. The US does not have an excess supply issue. In fact, many people would probably like a little bit more capacity, right? And they don't have it. So that's what makes it really exciting is you're not going to see we've faced pricing pressure in the US to be sure, but it has not been an excess supply issue. And if demand unlocks even a little bit, pricing firms up real quick. There is not that glut of product, and that makes for a very healthy market right away from a fundamental perspective.
Yeah, absolutely. And so we saw with the rescheduling process, medical cannabis is
Mhm.
now Schedule 3. The DEA hearing for adult use cannabis is set to start in a few days, and hopefully all things go according to plan and adult use is rescheduled by the end of the summer. So we've already seen Trulieve create a creative structure to uplist to the New York Stock Exchange, and certainly expect the rest of the MSOs will follow suit if and when they're able to do so. So I'm curious, how do you think that uplisting matters for the markets, and when do you expect public markets investors to come back to the sector in a big way?
There's a couple good questions there. So I think that uplisting matters a lot. I don't have the numbers in front of me, but when I was looking at it, it looked like an immediate doubling in daily volume for Trulieve versus how it used to trade. Absent earnings days and special events. It looked like a doubling of volume, but it also cleared the way for new people to custody the
Yeah.
shares. It opens the door for being included in indices. So, right now they are in a seasoning period for indice consideration. So if the S&P wants to build an index, they are now in that. They're not going to put them in right away, right? You need a certain amount of time for the indices to be comfortable that you're there. But they start getting included in the indices, and all of a sudden you have a passive inflow that has never been it's never been in the sector. It's never been available to the sector that will start to help the names. So you're getting immediate better clearing. You're getting immediate better custody. You're getting additional trading volume. And on top of that, to your second point, you're getting institutional interest that wasn't already there. And we're seeing a huge increase in the interest, but so far zero increase in action. And so I mean, what's happening is the folks are getting excited. They're doing the work. They're showing up to events. They're doing all the background work on something that they haven't participated in. Their difficulty now is they got to go up the chain to their compliance or whoever in the back office, in their firms, to say, here's why we're allowed to do this right now, and that's not easy, right? That is a tricky conversation. These companies are doing a good job trying to educate up that chain, but imagine if you're at a fund and you're an analyst. You're just an analyst at a fund, an asset management fund, and you're like, this is super exciting. This cannabis, I'm gonna get some upside here. You now have to go pitch it to like the rule makers at your firm. And that analyst has to have a lot of conviction to go pitch it up. What they need more than just like that one person, they need like a group of people at these funds who start caring and portfolio managers who start caring, and they can convince compliance that, hey, we need to look at this more seriously. We need to find the exact language in the executive order or the final order that can get us comfortable with owning these stocks outright and owning plant touching stocks. They are absolutely doing the work, and being medical only makes it a whole lot easier for someone, right? Being medically only, like Trulieve is, makes it a whole lot easier. Glass House, right? They announced today that in a couple days they're going to start trading. We don't cover that one, but Glass House is going to start trading on the New York Stock Exchange too. So it's all part of the momentum, but it is not a quick like, oh, we're here on the exchange. Here's all that massive upside. It's we're here on here on the exchange. Here's the massive amount of interest that needs to go figure out how they can own this stuff.
Yeah, absolutely. And I think it's an excellent point you bring up about custodying the shares. And it's such a minor thing that most people don't think about. But because all these US operators are on the Canadian Securities Exchange, most institutions just have no technical way of even holding the shares. I mean, even for us, we live in this industry, and doing any debt in public equities
Mhm.
through the CSE has proven a big challenge for us because we need to have an international vehicle and all of that. So I think just that technical overhang could be a major accelerant and prevent these shares from having such low liquidity as they've had historically.
Yeah, and I think you're just starting that wave of brokers trying to figure it out. Not just like, oh, should we do research on the sector? That is going to come for sure. But just figuring out, can we clear this? Can we, because you can't even, if you're a broker, it's tricky to even, or it might not even be worth your time to go even solicit orders and try to generate interest in some of the cannabis names because you don't have a way to even clear somebody if they said, yes, please buy me those shares. You can't even do it. And so I do think the pipes matter a lot here, and they're just being built.
Yep, they're just being built. And on that note, there's been a lot of discussion in the past and present about legislation like safer banking passing through Congress to give more explicit protections for banks to work in the industry and hopefully drive some more debt providers into the sector, for example. How much weight do you put to that passing to really accelerating, or sorry, how much do you think that needs to pass for the capital markets to reaccelerate?
I think the capital markets would like to see it happen in a legislative fashion, right?
Mhm.
Something like safer. Doing it via executive order or doing it via some sort of memo can just be rescinded, as we've seen, right? It can just
Yeah.
be rescinded in a future administration. So to get the capital markets really excited, it needs to be something stickier and a little bit more permanent, and that's like the legislative way to do it. Because if they see a memo, it's like, all right, but how excited should I get? How much should I dedicate this if it might not exist if there's a new administration coming? So they want to see the legislative side. I might mess this up a little bit, but if I remember correctly, Tim Scott, who's Senate Finance, has re-engaged with this issue, almost saying it's something that needs to be done. And then yesterday, you had a safe reintroduced. I think it was like Elizabeth Warren, it was Murkowski in Alaska, and it was another Republican as the third co-sponsor, forgetting who, but super bipartisan, right? You have both sides reintroduced. You have a committee chair that's responsible for this type of stuff, talking about it, encouraging it, and that would go a long way. The memos would be great. The memos, and I do think we'll get some of that as well. But the legislative, the here are the rules in writing that we can all agree upon. That's what it'll really take to get the capital markets unlocked. And I do think there's an appetite for it. I think now's the time. And we're getting to that period where it's summer and then it's midterms. So I don't know. I don't know where. I mean, I'm not a political analyst, but I don't know where the time is. But people are aligned on this, and it's something that to match the initial push from the administration needs to happen.
Yeah, absolutely. And I think it's a really prudent point you bring up with regards to needing something more than just, an Attorney General Blanche memo or whatever they would call it, right? And I think back to when we had the Cole
Yep.
memo, under President Obama's second term. And, that got a lot of the larger broker houses comfortable holding some of these securities in that 2017 to 2019 timeframe when they were all going public. And then under President Trump's first term, Jeff Sessions pulls the rug out from everybody and forces all this sell-off action. And obviously people just don't want a repeat of history there and want to really ensure that they have a stable legal framework going forward.
You're completely right. Like if you look at that holder base, that initial cannabis holder base, those people haven't come back. Right.
Yeah,
And I don't think they would play that forced liquidity memo game again. Right. I think they want the legislative side.
absolutely. And so, Bill, you mentioned how 11 of the securities you cover out of your 27 are cannabis related. I'm curious, the other 16, are they alcohol, tobacco, traditional CPG? Like, where else are you spending your time?
Yeah, so beverages, alcohol. I'm not doing any non-alc now. I guess some of them might own a little chunk of non-alc, but it's alcohol. And the retail universe is basically everything from like Sprouts Farmers Market to Walmart. And there will come a day where these US companies start trading like retailers a little bit, right? Like we're going to start talking about four wall economics of these boxes, and we're going to really start talking about same store sales and what's traffic and what's ticket and what's basket units or basket volume. And we're going to have new store productivity. We're going to start using all the metrics that matter for retail stocks when as this sector matures. And covering some retailers that are specialty retailers, I think gives us a little extra insight or even a lens into the investors who might end up caring about cannabis. So if you care about specialty retailers that offer, growth outside of, just boring consumer staples, right? If you want specialty retailers that can grow, cannabis can offer that. And so you start thinking like, all right, fine, if you care about Sprouts, maybe you should care about High Tide up in Canada, right? And maybe you should care about their comparable store sales history over the last few years and their ability to consolidate the industry. And if you take like High Tide's sales productivity per square foot, right? Or like a retail metric, it's way better than the grocery stores I cover, right? It's double probably the average of the grocery stores I cover or the retailers I cover. And so there's those type of investors, as they get more comfortable with what these people sell, will start giving them credit for how well they sell it. And it doesn't have to be High Tide in Canada. Obviously, they're doing great. They just give some of the best numbers that I can use to go compare. But they'll start figuring out, all right, who has limited license operations in a dominant position in Florida like Trulieve does. And that other coverage, whether it's that type of retail overlap or even just, gosh, the beverage analysts at all the investment firms, they should care about cannabis. We can go reach them, right? We know who they are. And I think that gives us and Roth a little bit of an advantage versus somebody who's just been talking to the same group of cannabis only investors for a while. So I'm like, all right, so and so cares so much about Constellation Brands. They're familiar with their investment in Canopy. They should reconsider what's been going on in cannabis because that is the type of person who will understand it first.
Yeah, absolutely. And the beverages space in particular in cannabis has been really interesting over the last few years. As you know, with the Farm Bill of 2018, that opened up a bit of a loophole for intoxicating beverages to be sold through a number of retail locations. Although we're seeing a big contraction in that market this year, as everyone's anticipating as of November, the federal intoxicating hemp ban will effectively cut the knees out from that industry. So I'm curious, how do you feel about the future of hemp beverages? And do you think there's a pathway where traditional alcohol beverage companies get into that space sooner rather than later?
Yeah. So I'm of the opinion that congressional acts are hard. And given how close we are to November again with the summer and midterms in between, action is going to be difficult. We obviously had President Trump's comments, or I guess a letter sent to Mike Johnson yesterday, or maybe the day before. I get these days crossed a little bit. But President Trump mentioning it again in another communication with Congress. He's looking for some extra funding, but within that funding request, there is, hey, we need to look at regulating this, or at a minimum, I think the language was, or at a minimum, delaying it. And that's fine. I mean, that's better than him not saying it. It's more specific than he's been previously, but but it already had a standalone vote, right? Rand Paul pulled it out, and it had a standalone vote. And Trump was encouraging people to vote against it when they were trying to pull it out. So it's going to be very hard, I think, to get it voted on again and get it included again. But I guess never say never. But your point's right. That was a huge demand shift for the industry, for beverages, and for the regulated THC MSOs. That emergence of intoxicating hemp, all products, not just beverages, but all products, coincides like exactly with when the US MSOs, their growth disappeared, when their margins started to get pressured, when pricing started contracting. And I think that's not coincidental. I think it was intoxicating hemp that really hurt the US MSO's demand. And to a smaller degree, it hurt demand for beverages. And it did so, not even that they're like direct occasion competitors, but the intoxicating hemp products were sold everywhere, right? I mean, you've seen it, every single channel you could imagine, oftentimes in the alcohol aisle. And the intoxicating hemp guys didn't have really any regulations, any rules, so they could go and pay slotting fees. So they could go in and say, we're buying this end cap, we're buying this 4x8 shelf, and that's something alcohol couldn't do. And so alcohol is not permitted to do that. Intoxicating hemp could. So all of a sudden, the best spots, the absolute best spots at a liquor store or at a gas station, are all of a sudden intoxicating hemp products rather than what would have been a beer product. So not as big of a demand suck maybe as it was on the regulated THC market, but intoxicating hemp hurt beer and alcohol as well. So I do still think the ban goes into effect, but I don't have a great way to handicap it. I think the alcohol industry, the manufacturers don't want it. The distributors do, because they're the ones who are carrying it right now, and it's a rare source of growth for them. So the alcohol industry is a little conflicted on what they want, whether you're a manufacturer or a distributor. And they're both very powerful lobbying organizations in their own right. And the MSOs don't want it. And so it's US MSOs and US alcohol manufacturers versus intoxicating hemp and beer distributors is what the battle basically is.
It's really interesting, and I think that there's also potentially even reason for the beer manufacturers to want the ban to go into place, drive all the existing operators out of business, then get the regs reformed and buy them up for pennies on the dollar.
Yeah, and I mean, there's a whole lot of interesting stuff, because Howard Kessler's CBD reimbursement program talks about a cap on THC that's higher than the language that closed the Farm Bill loophole, right? And so I don't know what we settle on. And if a market emerges, I don't know what the potency settles on. But my guess would be it settles on something that's far outside the scope of what most products that are being sold come in at. So if most products are 5, 10, over 10, some will obviously go way over 10. I would guess if a regulated market emerged, it would go toward that CBD reimbursement number, which was 3 milligrams.
Makes sense.
And that's a hard spot to be, because it's not quite what folks were looking for maybe in that channel. But no matter what happens, intoxicating hemp was the best recruitment vehicle for consumers to enter the cannabis category that's ever existed, right? If it would just been dispensary only in all the states, that would never do as much as the availability that intoxicating hemp had in all outlets all across the country to go and recruit new consumers. It was very approachable.
Yep, absolutely. Absolutely. And Bill, what are your thoughts about the ALJ hearing that's starting next week with regards to rescheduling for adult use cannabis also?
Yeah. I think it's important to remember that it builds off a lot of the work done under the prior administration. I think that's how we're able to, expedite it, or how we're able to have a hearing that has like a precise end date, right? I think that's what's unique about this hearing is it isn't that it just begins on the 29th. We know when it ends. It ends on July 15th. And under the Biden administration, when the hearings were announced, there was no end date, right? There, it was here. The hearing's going to start. I don't even know if we got a start date, did we? But um, it was no end date was ever announced, and so I think that is a stark difference here with this process. My hope is, and I know if people are asking for it, is transparency during the next week and a half or next 2 weeks. Because from what I can tell, there is not yet a public vehicle to watch it. I mean, I guess you and I could go into the courtroom possibly, but I don't see like any live stream options. And I know people have requested it now from the judge. But it's basically the government versus groups that are against this idea of rescheduling adult use. And the for better or worse, the government picked the judge. The government picked the timeline. The government set the schedule, more or less. And so I do think that this process has a pretty good likelihood of having a favorable outcome for the industry. And it would be that next unlock. We talked about, how companies have been able to uplist. There's a whole other group of companies who have structures more complicated than True Leaves, who can't ring fence as easily their medical from their adult use, who then could go pursue similar actions, and who then could say, we're federally legal, we're exchange compliant, here's the reason you can custody us, here's the reason you can own our stock, in a much more convincible, mandated almost fashion out of the adult use hearing. So fingers crossed. Obviously we don't know what the outcome is going to be. I'd expect lawsuits upon lawsuits no matter what the outcome is. But having a end set date is a wonderful sign for the process, I believe.
It is, yeah, and we're cautiously optimistic in the same way that it'll get adult use rescheduling over the finish line. But I think everyone who's been in the industry for a while knows that we've seen the rug pulled by the government many a time, so it's not over till it's over.
Yeah, it's a weird spot they're in, right? It's weird to have one plant or one substance with two different scheduling based on how it's used, right? There isn't anything else like that. And so that is the inconsistency that I think needs to be addressed, and maybe even suggests which way it should be addressed.
Yeah, absolutely. Well, Bill, this has been a fantastic conversation, so I really appreciate you coming on the podcast today.
Of course, Jordan, thank you for having us. I don't need to tell you, but now I think is the most interesting time we've seen in a while. When I think about covering three different sectors, cannabis for me at times took a back seat because there just weren't enough people who cared. That is not the case anymore. Cannabis has probably taken the majority of my publishing now. Right? I think if it's 11 of 27 stocks I cover, it's probably more than half of the notes I'm publishing right now and half of the conversations I'm having right now. Hopefully, that starts to turn into the action that hasn't been present from the investment community. But that's where I think we are, and the companies themselves, they're a lot healthier than people realize. They have margins that would be the envy of any other CPG or any other retail style industry. And I think people are going to start caring about that type of stuff.
Absolutely, I totally agree. Um, and if listeners want to reach out and get in touch with Roth to get under the hood on your analyst coverage, or potentially have a business in the industry that's looking to raise or find a strategic acquire, anything like that, is there a good way for them to reach out?
Yeah, the best way to reach out to you, Jordan, or if people want me directly, it's easy. It's B Kirk, Kirk at roth.com.
Fantastic. Well, thanks again, Bill, and really appreciate it.
Yep. Have yourself a wonderful fourth, Jordan, if I don't talk to you.
Absolutely. You too.